The investors looking for bond yields to stay lower for a whole lot longer.
Interest rates probably aren't going up anymore in the US.
Low interest rates, low inflation.
Interest rates will be lower for longer.
Lower for longer.
Lower for longer.
We had a Fed coming out a lot more dovish than markets expected. You've had BOJ, ECB, all of them signaling that they're willing to stay on hold for much longer.
Yields in the U.S. are coming off.
I think the 10-year Treasury is headed to 230.
Yields in Europe have come off.
It'll be very hard to see a meaningful rise in gilt yields.
Weakness in foreign economies that has kept foreign bond yields lower.
The mood music of slowing growth and it just, lower yields, lower inflation and probably higher equity prices.
To discuss, joining me around the table here in New York is Diana Jaffee, TCW Group Senior Portfolio Manager, Michael Kushma, Morgan Stanley Investment Management, Global Fixed Income CIO, and Noah Weisberger, rounding out the team, AB Bernstein, US Portfolio Strategy Managing Director. Let's begin with you, Diane. What underpins this big move over the last week?
The lower yields obviously are good for people who are long bonds, but they're also good for equity markets as well because it means that the multiples can be much higher.
Michael?
Monetary policy keeps getting easier after everyone expecting tighter monetary policy over the course of 2019. Central banks have made a U-turn pretty much across the world.
What I'm trying to figure out now is whether it's monetary policy getting easier or whether it's the belief that monetary policy and easy monetary policy just won't do much to stimulate growth and inflation.
I think that's the key in how to position going forward, which is, are we seeing the Fed trying to get ahead of the curve, or are they, responding to weakness already? The U.S. is a little bit behind in the weakness, or said differently, the U.S. still remains a little bit stronger. And I think you can see that with the way the markets are performing. Stocks up, bonds up, dollar up. It kind of tells you what the relative pattern is.